All right, thank you so much for staying with us. Now, out of 13 listed banks on the Nigerian Exchange Limited, 6 have so far met the new capital thresholds issued by the Central Bank of Nigeria. They include Access Bank, Zenith Bank, GT Bank, Wema Bank, Jaiz Bank, and Stanbic IBTC. Now, in March 2024, the CBN directed commercial banks with international authorization to increase their capital base to 500 billion naira, while those with international licenses must raise 200 billion naira. Banks with regional authorization were given 50 billion naira capital floor. Similarly, non-interest banks with national and regional authorizations are required to increase their capital to 20 billion naira and 10 billion naira, respectively. CBN gave a compliance deadline of March 2026. Well, let's look at this development and other issues surrounding the banking industry as at today. My guest is Mr. Gbola Olojede. He is a finance expert and he joins me to break this down. Mr. Olojede, thank you so much. It's good to see you this Monday afternoon.
Yeah, nice to be here on the program.
Yes, I read through this yesterday and I was worried. And out of 13 of them, we have just 6 now meeting up this time. And it's March 2026. That's around about 6 months to go. What does this mean for the entire industry?
I don't think there is any reason to panic yet because the options that are available for these institutions are quite a few. They have options. So you could do a rights issue, which some of them have done, which is what Access Bank did rights issue, Wema Bank did rights issue. You can also do a public offer, invite new people. Rights is for existing shareholders to bring more money to the company. Or you can do a public offer where you ask everybody, the entire public, to come and subscribe to the shares of the organization. You can do both as well. Do a bit of right issue, do a bit of public offer, or you can even downgrade your license. If you had an international license before and you think, oh, maybe I should just stay at the national level, then you can downgrade your license and come to national, or national can become regional. That is apart from the opportunities for mergers and acquisition that exist. So at the beginning of this program, all the banks will have shared with the CBN their plans, rights issue, public offer, mergers and acquisition, downgrade of license, whatever options they want to choose, or a mix of options. They will have shared it with CBN. So let's believe that those, it's not just a belief. I'm actually aware of a couple of those banks that are in the process of the second round of capital as we speak.
So this in its entirety is to promote more stability, or is this going to, how does it impact the consumers here? Let me ask that way. Because the consumers some are worried when they hear of mergers and all of that. They become skeptical about their banks and, the banking process.
No, they should be delighted, actually, because the process is going to produce very strong, much stronger banks than what we had. With a lot of capital. CBN was particularly stringent in determining what kind of capital it wants. And that will further boost the strength of the bank. We've been talking about the current administration, for example, has been speaking about a $1 trillion economy. How are you going to power that kind of an economy under the prevailing capitalization level? That was a big concern for the CBN, which must have been part of why it decided to go this route. And it's a worthy route. These organizations are going to end up with huge capital, and they will be able to do a lot more towards turning the turbines of this economy in the direction in which we need it to go. There are also things that require attention, though. We've been here before when banks raised a lot of capital and they frittered away that capital. They just suddenly saw a lot of money, and then we saw this huge, a deluge of loans that shouldn't have been granted. People got carried away and they did all sorts of things that they shouldn't have done. But I believe that those were in the past. The regulatory environment has since changed and has been strengthened, and we're not likely to go back to that season when people raise money and frittered away the money in bad loans.
One of the roles that I understand of a bank is to, of course, help businesses raise funds. When you look at the present interest rates coming from the MPR, from the central bank, which is about 27.50%, banks are not lending lesser than that, obviously. Some are lending at above 30%. And I have business people that will tell you that they don't know the kind of business you're going to run in Nigeria as of today, and you borrow at above 30%, and you're expected to make profit. How do we go about it? So what do you make of the present interest rates and the banks raising, letting the SMEs and small businesses get in funding?
It's a catch-22. On one side, CBN has a mandate to help to drive down inflation.
Yes.
And one of the tested and trusted instruments for achieving that goal is monetary tightening. So it was monetary tightening that has led us to take MPR all the way from about 18%, 18.25 to 28 thereabout. Unfortunately, there is the unfortunate part, there is the fortunate part. The unfortunate part is that the inflation continued for much longer. And the factors that were driving, some of the factors that were driving it are still a little bit around, even as at today. So that will constrain how we lower interest rates. You don't want to allow the gains of the last few months to be rubbished. So CBN is being cautious, and we have seen how that played out in its reaction to MPR in its last two meetings, where it literally held the rate constant. In view of the fragility, the system is still a bit fragile. So it was hoping to continue to watch and then be able to take a bold step at the right time. The fortunate part is that right time that it is waiting for, we are increasingly, moving in the right direction on that right path, which is that inflation has continued to decline. If inflation, which led us in this direction in the first instance, is declining, and there is a reasonable reason to believe that this decline is sustainable, then the expectation is that eventually the monetary tightening will start to loosen. Let's be clear about this. This approach is not just a Nigerian approach, it's a global approach. If you look at the plot of interest rates globally after COVID-19, from Europe to Japan to America, you will see the same pattern, the rise. And then when inflation started to plateau and there was an inflection, then you begin to see the central banks react by starting to cut rates. So this is what we expect. On a personal note, I am thinking that in the next MPR, we might see CBN take a cautious step of dropping the MPR by, even if it is 25 basis points, it will be a step in the right direction.
Let's see that happening because we also expect the United States Federal Reserves to start to shift on that, tightened monetary policy stance. So let's see if that would also happen or impact us down here in Nigeria. Again, the $1 trillion economy. Looking at our rebased GDP, and as of today, I think it's about 240-something million US dollars. That's when we convert it to dollars, obviously. I think it's above 300 and something trillion in Naira. But if we look at that figure, there's a particular level of growth that we must maintain or sustain for us to be able to get to a $1 trillion economy. What do you also make of that? Because only the banks cannot make this happen.
It's a huge challenge. The kind of growth that we require to take us there within the framework of time that we have indicated is tough. It's tough to make happen. However, that does not invalidate the reality that we can rev up this economy to a 1 trillion economy. It may not happen within the time that was originally earmarked, but it is a possibility. So we must keep our eye focused on it, knowing that this is possible. And as long as we continue to do the right thing along that path, we will get there. It may not be as, like I said, it may not be on the dot of what we initially projected it would be. It might extend a bit beyond that. But then the opportunity is huge. This economy is full of opportunities. It is full of opportunities to rev it up, to get more productive and build it block by block to become, once again, the topmost or the largest economy in Africa.
At the time, our banking sector was exposed to some particular sectors. Yes, like the oil and gas space. Yeah, there was also a time, I think, around the electricity space when power and all of that. But I don't think we still have such, that's not the case at the moment, right or wrong? Do we still have those exposures?
I think some of those exposures still exist. It is part of that forbearance. You know, a while ago, the CBN had spoken about certain forbearance that is granted and how it wants the banks to be able to exit this forbearance. In fact, according to CBN, wants these banks to exit the forbearance this half year, 2025. It might actually be part of why we are seeing what appear to be a delay in the approval of the finances, the accounts of the top 4 banks, of top 4 banks as we speak. You know, the popular Fugaz, only F, which is First Bank, has published. The other 4 are still with CBN as we speak. So it might be as a result of some ding-dong, some clarification, you know, with relation to the forbearance. So some of those things are still there. It is part of the reason why this initiative to raise additional capital is a fantastic idea. If they had to provision for some of these forbearance issues, they will be able to comfortably provision for it and move on. That right there is I think the forbearance is still there. And the oil and gas exposure, power exposure is still there. So between CBN and the operators, they will reach a conclusion and we can have an approved situation very soon, I believe.
In that same line, finally, before I let you go, where we are still talking about the banks trying to help augment and sort out the economic fallout of reforms, is where we talk about interventions of government. And I just spoke to the essay to the president, and I'm sure if you heard part of that conversation outlining what government intends to do. And I was reading through and I saw also a large program for school feeding and all of this. You know, when we hear of these large figures, you know, I asked him that question. How do we monitor implementation, and what do you make of schemes like this one?
It can be monitored. It depends on the commitment of the government to get it done. Whether we are feeding people or you are passing cash down to certain stratum of the society, all those things can be validated, independently validated. The database that is being used can be validated. What is being spent, the schools that are beneficiaries, all these things can be validated. That is the reality. So it depends on the level of commitment of the government to ensure that this initiative it is, you know, putting on board would deliver on the intentions of government. Otherwise, what we have seen in the past are situations in which some of the interventions did not reach the people that they were supposed to reach. Some people cornered some of this intervention, and it frustrated the effort and intentions of government. So government can decide to rev up the level of accountability expectations for this program so that it would deliver what government wanted to deliver.
Indeed, because that's where my fear and my worry comes in, because proper implementation is key. When people feel the impact of all of this, they would speak and they would talk about it, of course.
Correct.
Well, wrapping up our conversation now, back to our banking space. That was just a bit of outside the banking world, and, you know, to check about the interventions and all. What is your outlook for Nigeria's banking sector? I also read through the fact that despite all of this, the banks are still raking in so much money. There's still that confidence in Nigeria's banking system. I think even the ratings are not doing badly with our banks at this time. So what do you make of the outlook for Nigeria's banking as we get to the last quarter of 2025?
The outlook is bright because the opportunities are huge. Oil and gas alone is massive. Infrastructure is heavy. Consumer goods, industrial goods, the need for financing is huge. However, we now need to be able to also steer a portion of all this funding in the direction that banks will naturally not go. And that has to do with how we can make, well, this is not just about banks. It's also about other large corporates that are doing very well in this economy, to be able to fund certain risk capital that will help us to drive the SMEs, all those startups, and set them on the right pedestal to drive this economy the way they do in other parts of the world. As it is today, most of the startup funding that are obtained in this economy are from outside of the country. They are global. And it is so tiny for the entire Africa. There was one particular year I was looking at. The entire startup funding that Africa got was not up to what India as a single nation got. And it should get us thinking that we need to find local funding to also fund startup, venture capital initiatives in this economy. And the opportunity is there.
So, Bola Olodede, always nice having you on this show. Thank you so much for your time. Have a great week.
Yeah. Thanks for having me, and you too.
Mr. Bola is the finance expert. He joined us from Lagos here via Zoom. Well, it's time to review.